Good morning. It's Wednesday, August 28th, about 6 a.m. Central Time. Over at the precious metals are correcting after another consolidative session on Tuesday. Something to note in my journal is that the September option expiration, silver closed just over $30 an ounce. Therefore, those call options were exercised, leaving traders long September silver and rendering the $30 puts worthless. Now, those traders that are long at $30 will have exactly 48 hours to decide whether or not they should roll over to December or throw in the towel. So the question is, do the short sellers now get revenge? And I think that 48-hour window is going to give us a lot of clues. Looking at the overnight market here, December gold down $16 at $25.37. Low of the overnight session is $25.36. We were right near those all-time highs here earlier in the session as it got underway at about 5 p.m. yesterday. December silver down 58 cents at $29.85. That's almost a 2% correction. December copper down $7.35 at $4.22. That's about a 1.71% correction. I think the ugliest chart out of the metals markets is the platinum. It's looking like it's starting to roll back over here. So a lot of outside pressure in other markets. The dollar index up 42. Crude oil futures down another 2%, breaking back below that 74 level. And it's really just a sea of red on the screen here. So, the question is that are people going to add on this pullback? And is this a correction, or is this just a pullback, or is this the setup for a crash? So the differentials on there are pullbacks are 2 to 5%, corrections are 5 to 10, and a crash is lower than 20%. So looking at today here, we did have a Fed speaker speak in the overnight session. That was Governor Waller. It was at 1:15 a.m. I'll have to look at the price action on the chart, see if there was any volatility around there, see if he was the catalyst to take this market and roll it over. And then after the market closes at 4 p.m., we'll see if Atlanta Fed President Bostic, he is an FOMC voter, he will speak. So there's not really a lot here to prop up these markets at the moment. The big news is going to be NVIDIA, which comes out after the bell. That's going to be a big mover and shaker, and that's really going to determine the direction, I think, of the stock market here in the near term. Those working closely with me had purchased some put spreads in the equity markets here yesterday for a bit of protection on those markets. If you want to know a little bit more information about that, give me a buzz, shoot me an email, shoot me a text, and I'll let you know. So in yesterday's Metals Minute, I discussed how wisely combining a couple different key technical indicators could allow you to read the market, identify situations where the odds may shift in your favor. But one other thing you have to note is that understanding the economic cycle that we're in could really help you understand the primary drivers of the market that you're trading in. For instance, gold right now at or near all-time highs. It has everything it needs to prove it. It's got the Fed cutting rates. It has a slowdown in the market. People are looking to allocate out of higher yielding savings and go into that safety and go for the gold market. Now, what about silver? Why isn't that at all-time highs? Is it manipulation? Is it something else? No, it's because 64% of the demand on silver is industrial demand. Its price action is only 84% correlated to the gold market. That's why it's up a bit here. And if you look at the correlation of the copper market, 67%. So who's the biggest consumer of copper? China. China's economy is completely in the gutter. So that's why there's pressure on the copper market right now, down 1.7. And then that silver market is reflecting that quite closely. The gold market under some natural pressure from the dollar index being weaker. 2-year treasury yields about unchanged, but I think people are booking some profits here in the gold market because they're concerned. Perhaps they're taking off some of that gold near the all-time highs and YOLOing into some NVIDIA calls, and they're going to roll that thing out and see what happens, roll the dice here. But I'm not really certain here. I just know that correlation between the copper and the silver is quite high, and you really want to pay attention to that. If you look at the chart action here and you go to, my particular trend discovery system, it never went bullish on the silver market. It came close intraday. We were above there, where if it would have closed, it would have triggered the bulls. And then the key is that the next following day you see some follow through to the upside, and that's what really gets a powerful signal and really puts, I think that the odds go in my favor on when the market moves out. So with silver falling and not really getting to get over, and I'll give you that kind of key level you want to see a close above, it's going to be 30.60 and a half. So call it 30.61. You want to see it close above that. Right now we're down at about 29.88. The low was 29.78. Guess what number that was? 50-day moving average. So below that, you don't want to see a close below the 50-day moving average. Something else to note is that in September, and I'm going to put this in the Metal's Edge, I'm going to give you the 5, the 10, the 15 year, all those seasonal analysis on the silver market and overlay them going down, and you'll see how weak that market's been in the past. Now, people will tell me this has been a different year because of the fact that the Fed's cutting rates, and I 100% agree with you. But it's something that I just have to keep in the back of my mind, that there is that typical seasonal weakness. And we'll also have to look, because we're going 5, 10, 15, 20. We can even go 30 years back if you want. We could see whether or not there was a cutting cycle that occurred, and how did the silver market perform during that particular level. So it's just a little bit of analysis, and it's merely just one tool in the toolbox. You got a screwdriver, you got a hammer, you got a tape measure, you got pliers, you got all kinds of things. That's one particular thing. So if the technical indicators start showing that, hey, we're going to probably break down, you get also some things where the economic data starts to sputter again, you get the industrial data sputtering, and then you get the seasonal weakness. Well, I think that sets up for a high probability that we're going to pull back. So, you know, if you are working with us too, I'm going to let you know where to add on silver, where to sell on silver, and then what put option to buy for protection. So reach out to me for that. If you got any questions, give me a call, 312-858-7303. Remember, futures and option trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.